Hey everyone, SoFi is scheduled to report quarterly earnings results on Monday morning, April 29th, before the markets open. Now, I'll preview what investors should look for from SoFi in those quarterly updates, and I'll update my recommendation here on whether or not I think you should buy SoFi stock before its earnings release. So, let's look at what I think investors should look for from SoFi.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so the biggest thing I want investors to pay attention to, or the biggest thing I think investors are going to be paying attention to, including myself, is SoFi's longer term outlook. Now, the company gave a very optimistic and ambitious long term outlook when it reported results in the previous quarter. And I'm going to want to look to see if SoFi management is standing by those recommendations or if anything has changed beyond those. I'm not looking for any increases in those guidance because they were so robust to begin with. I'd be happy just to see a reiteration of those numbers that the company gave in its previous quarter. This was partly the reason why I upgraded SoFi stock to a buy a couple of months ago following these earnings announcements, and I've kept SoFi stock as a buy up until this date. So the last time I updated SoFi was on April 2nd, where I reiterated my buy recommendation for SoFi stock. So management said that looking beyond 2024, they expect 20 to 25% compound revenue growth from 2023 to 2026. They also said that's going to boost earnings per share between 55 cents and 80 cents in 2026. That's a lot of earnings per share growth from where SoFi was at this point in time, which was the first quarter where it reported GAAP profitability on the bottom line to begin with. Moreover, management said that they see 20 to 25% earnings per share growth beyond 2026, reflecting both growth of the core business plus the added benefit of new business lines that they're going to launch between 2024 and 2026. So these were strong forecasts. And given that management hit the forecast of achieving profitability on the bottom line in Q4 of 2023, I gave management more credibility in their ability to hit targets and hit forecasts they set for themselves. So it's reasonable to assume they will hit somewhere around this range of expectations they announced earlier. So what I'll be looking for is just a reiteration, just, repeat what you said and tell investors that you remain confident that you're going to hit these targets. And that will just give more confidence, increase the probability that I place on SoFi hitting these targets, because don't get me wrong, I'm not giving them 100% probability of hitting these targets, but I am giving them a meaningful probability of hitting this target. And if they come out and reiterate these numbers, then I'm going to increase the probability. And if they show progress on growth in profitability, on growth on the top line, I'm going to reiterate my confidence here. Now, another interesting point I'll be paying attention to is SoFi said that they expect lending revenue in 2024 to be about 92 to 95% of 2023 levels. That's an interesting way of saying that they expect lending revenue to decline between 5 and 8%, right? That's essentially what it means. It's not going to be the levels it was in 2023. It's going to be below that. 92 to 95% of the 2023 levels is a friendly way of, or a sneaky way of telling investors that your revenue from lending is going to decline year over year. And notwithstanding the trickery here, I thought that was a good thing. I thought that was a prudent move from management, because remember, lending is under the control of SoFi. They decide how much money to lend. They decide their rate, their algorithm for approving or declining borrowers. So they can decide to increase that, or they can decide to decrease that based on their macroeconomic outlook. And they gave a prudent economic outlook where they were expecting more economic trouble than I was initially expecting for 2024. And certainly, since the company gave this guidance, The economy, the data that's come in terms of unemployment, in terms of GDP, in terms of consumer spending, really across the board, macroeconomic outlook in the US has been much stronger than anticipated by many economists, myself including. I thought the GDP, I thought the growth was going to be about half the level that it's come in so far in 2024. I thought job growth would be nowhere near where it's been so far. I thought consumer spending would be nowhere near where it's been so far, all of which is coming in ahead of what I thought, what I was expecting. Given the fact that the Federal Reserve had increased interest rates substantially in 2023, I thought that would weigh down economic activity in 2024. I thought that would slow down consumer interest in buying cars, but it really hasn't. It's slowed down consumer interest in buying electric vehicles, but not cars overall, as I've seen from the reports from GM and other automakers. Legacy automakers, hybrids, they're selling really well. It's the electric vehicles that are not selling that well. And then home sales. I thought the home industry would be a lot worse than it's actually been in 2024. Home prices are actually rising despite record mortgage rates. People are still buying homes at even these prices, which I've scarcely found a person that can say home prices are even fairly valued. I think every single person I've spoken with has said home values are too high, home prices are too high. Still, people are buying homes, homes are selling, they're selling quickly, and people are buying. So the economy has surprised me, to be sure. And so I'm going to look to this from SoFi to update their forecast, their guidance for 2024, given the economy has come in better than expected. That's even better news for SoFi, because SoFi, if you haven't been paying attention, the vast majority of their loans have been personal loans. These are the loans that people default on first. They don't default on their mortgage. They don't default on their car loans. Those are later down the line of economic trouble. The first thing you default on if you lose your job is personal loans or credit card debt, because that doesn't come with your home being foreclosed on. If you owe SoFi $10,000 and you don't pay them and it's on a personal line of credit, you're not going to get your home foreclosed on. You're not going to get your car repoed. But if you owe Honda $10,000 and you don't pay, they'll come and repossess your car. If you owe Bank of America on your home mortgage and you don't pay, they're going to come and take your home away and kick you out. So people are hesitant to stop paying those loans. Those will be the last to go if you face economic trouble. So SoFi is on the front lines of economic difficulty. They'll be the first to experience the pains. So now that the first quarter of the year has come in better than expected, I'm expecting SoFi management to update that in their decision making, to update that in their lending revenue. Are they sticking with this lending revenue forecast for 2024, or are they increasing their lending activity given the better position consumers are in, with hundreds of thousands of jobs added, with personal disposable income rising, with GDP rising, with unemployment falling, etc., etc. So I'd be interested to see that. Now, to answer my question, is SoFi stock a buy before earnings, or should you buy SoFi stock before the earnings come out? And if you've been watching my videos about these earnings forecasts and whether or not to buy, you'll have already heard me say the elevated risk environment surrounding earnings releases. Stock prices are volatile around earnings, extra volatile. It's not uncommon to see stock prices move by 20, 30, 40% following an earnings release. So given that extra risk, I tend to be cautious heading into earnings. And this is not an exception. I think if you're interested in SoFi stock, I think the more prudent strategy would be to wait until after earnings come out, even though I think earnings are going to be relatively good for SoFi, given the fact of how exposed it is to the macroeconomy, how it's on the front lines, and the macroeconomy has performed much better than expected. I expect that to be reflected in SoFi's results. All that being said, I would still say better to wait until after the earnings come out, look at all the numbers, digest all the figures, and then make your decision. Worst case scenario, you miss out on some gains, but at least you don't lose your money. At least you don't experience a 20 or 30% decline in your investment. So that's my strategy here going into SoFi. Even though I have SoFi stock rated as a buy, I still have it rated as a buy, and I will update this recommendation following SoFi's earnings release. So I'll do a full evaluation of SoFi after the numbers come out. I'll evaluate SoFi stock and incorporate the change in valuation as well as when the new numbers come out. And I'll update you and I'll let you know if the stock, if I think it's still a buy then. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.